When you think of FedEx, you probably picture that purple and orange truck, right? The one dropping off a package. But behind that one box is this massive global logistics empire, pulling in nearly $90 billion a year. And right now, that empire is at a huge turning point, in the middle of its biggest overhaul in half a century.
Okay, so let's dive right in. The big question we're really tackling today is this. Is this massive transformation a sign of strength that investors should be jumping on? Or is it more of a desperate move from a company feeling the heat? We're going to break it all down, investment memo style.
All right, let's not beat around the bush. Here's the core thesis right up front. After years of kind of falling behind, FedEx is now aggressively fixing its own internal problems. It's a classic turnaround story, and you know what? The early signs are suggesting it's becoming a more and more compelling investment. Let's get into why.
To really get why this turnaround is so important, you first have to understand the pressure cooker FedEx has been in. For years, a mix of internal issues and outside threats were just squeezing the company, making a massive change not just a good idea, but an absolute necessity. Let's start with the clearest sign of trouble, what we're calling the profitability gap. Just look at these numbers. For years, FedEx's operating margin, basically how much profit it makes on each dollar of sales, was stuck at around 6%. Meanwhile, its biggest rival, UPS, was consistently pulling in almost double that. This wasn't just some number on a spreadsheet. It was a huge, flashing red light signaling some deep-seated inefficiency. So why the huge gap? Well, it really boils down to two big things. Internally, FedEx was operating its air network, Express, and its ground network as two totally separate companies. I mean, think about it. Two different trucks from the same company delivering packages to the same street. It was just redundant and super expensive. And then externally, the whole game was changing, and fast.
And the biggest external threat? It actually came from a former customer, Amazon. In 2024 alone, Amazon delivered 6.1 billion packages in the US. Now, to put that into perspective, FedEx delivered 3.4 billion. That is a seismic shift in the industry, and it put unbelievable pressure on both FedEx's prices and its market share.
So, facing all this, what do you do? Well, new leadership stepped in with a really bold plan. In 2022, the founder, Fred Smith, handed the CEO job over to Raj Subramaniam, and he immediately launched this aggressive, three-part strategy to right the ship. So here's the game plan. First up, the Drive program. This is a massive cost-cutting plan aiming to slash $4 billion in expenses. Second, what they're calling One FedEx, finally merging those express and ground networks to get rid of all that waste. And third, a plan to spin off their super profitable freight division, which should unlock its full value as its own standalone company.
And the vision here isn't just about cutting costs. As the CEO himself put it, the real goal is to create a smarter, more efficient, and way more tech-savvy logistics network. We're talking about a fundamental rewiring of the company's DNA. Okay, so that's the plan. But the billion-dollar question is it actually working? Well, the evidence seems to suggest that it is, which brings us to the bull case, all the reasons to be optimistic that this turnaround is the real deal. First off, even with all its problems, FedEx never lost its powerful competitive advantages, what investors call a moat. I mean, its global network of planes and hubs is incredibly difficult and expensive for anyone to replicate. The brand is still a household name for reliability. And for its biggest customers, trying to switch away from FedEx's systems is a huge, costly headache.
The new leadership team is also a huge part of the bull case. They get top marks for their strategic vision and their ability to adapt. And yeah, while the execution is still a work in progress, you can see right here on the scorecard that it's clearly improving. They are making the tough calls that past leaders just seemed hesitant to make.
And look, this isn't just talk. We've got hard data to back it up. That Drive program is already delivering results. In fiscal year 2023, the company hit $1.8 billion in cost savings. That puts them way ahead of schedule on their path to that $4 billion goal. This is real, tangible proof of execution.
And those savings, they're flowing right down to the company's financial health. FedEx now has a free cash flow yield around 5.5%, which is really healthy. The simplest way to think about it is this. For every $100 of the company's value on the stock market, it's generating $5.50 in pure cash every year. And that's cash they can use to invest, pay down debt, or reward shareholders.
And speaking of rewarding shareholders, this might be the strongest signal of all, a 53% dividend hike. I mean, that's not something a company does if it's worried about the future. It's a huge statement of confidence from management in their long-term plan.
Okay, but let's pump the brakes for a second. No investment is ever a sure thing. The bull case is definitely compelling, but there is some significant turbulence on the radar. To get the full picture, we absolutely have to look at the bear case for FedEx.
So you can really see two very different roads ahead. The bull case is a world where the integration is a success. Margins climb up toward that 10% mark, and the stock gets valued higher. But the bear case is just as possible. A global recession could crush shipping demand, this super complex network integration could fail, or fierce competition could just eat away at any of those hard-won cost savings. The execution risk here is very, very real.
So this brings us to the final verdict. We've seen the pressure, we've broken down the plan, and we've weighed both the bull case and the bear case. Now it's time to put it all together.
Let's circle all the way back to our original question. After digging through the strategy and the numbers, is FedEx a smart bet for investors today?
Our final take is this. FedEx is steering its massive ship through a storm. And honestly, it's a storm that was largely of its own making. The destination, a leaner, meaner, more profitable company, is clear. But the journey itself is going to be turbulent. The real question for investors is whether they have the stomach for the voyage.
So let's wrap with the key takeaways. The investment thesis here is a turnaround story, plain and simple. The catalyst is a new CEO with a clear three-part plan. The numbers so far, they're encouraging, with real progress on cost cuts and cash flow. But the big if, the ultimate risk, is execution. Success really hinges on management's ability to pull off one of the most complex corporate reorganizations we've seen in a while, all while hoping the global economy holds steady. It's a high-stakes, high-reward story that is still very much being written.